All right, let me get my screen shared here. And just a quick preamble comment. Last night, I got a really bad cold. And it just kind of kept me up all night, coughing and sneezing, and my nose is running. So I apologize in advance if you hear me cough every now and then or my nose is running. I think I'm reasonably confident to do this session, but JVC, feel free to hop in anytime or
No
correct
problem.
me if I do something silly. So anyway, let's see. I want to get the other stuff up. All right, welcome everybody. As JVC said, I see a lot of familiar names. Thanks for coming. I see a bunch of TRG names as well, so that's cool.
Some
What
new
we're
names
gonna,
too. So welcome.
yeah, that is true. Some new names, and we're pushing up right now, which is really interesting because there's been a couple of really good scalp trades this morning. I don't want to just jump right into, I originally planned to do this way, where I was going to show the Jigsaw stuff and the preview of the session. I was going to do that first, and then we get, well, we're getting a number right now. We just got the global S&P PMI number, and then at the top of the hour we get ISM PMI. My original intention was to do it that way, and then when the number comes out, we'll deal with the reaction and try to trade it. I've decided to do it a little differently because of my evening activities of being sick. So what I'm going to do, I'm going to talk about the class a little bit before the number, then we'll get the number, and then I'll go through what we're going to do in the Jigsaw class in a little bit more detail, because I don't want to have to rush it too much. And again, I'm not completely 100%. So the other thing I want to do, I've got other stuff on my screen right now that isn't really related to Jigsaw. This is a toss, Thinkorswim for market internals and the equities. I'm going to just minimize that. This is a Jigsaw component right here, the economic release pop up, and you can see we have those things that I mentioned coming up over here. So that's one feature of Jigsaw I really like. I do not subscribe to any news services as a trader. I don't watch Twitter when I'm trading. I don't read email. I don't go on Facebook. I trade the price action and the traded volume. And it took me a while to get to that point. I always knew that was what you had to do. I heard that over and over again. Don't watch the news. And for the new people, I'm a little off today, but let me do a quick introduction of myself. I'm Jeff Mam. I have been trading for almost 51 years, 50 and change now. Started with options in the 1970s. I used to buy options on takeover candidates, and that was actually a pretty lucrative game because there was a lot of, greed is good. The whole Wall Street thing, there was tons of leveraged buyouts in the 70s and 80s. And so I just allocated capital into really far out of the money options, and it paid off regularly, which was kind of cool. But anyway, fast forward, I've traded other kinds of options, OEX options. And then I got into futures in the late 80s, early 90s, and there weren't really any electronic platforms yet. But the first one that was of any value, to a retail trader was called eSignal. And at the same time, there was a kind of professional trader platform called XTrader, which is still around. That's help me out, guys. What's the name of XTrader now? It's
I don't know. XTrader, is it? That didn't become like Scott Trade or eSignal or like one of those.
No. It's that DOM only platform that institutional.
Oh, TT.
Yeah, it's TT.
Trading Technologies.
Right?
Yeah, there you go.
Yeah, exactly. Yeah, TT used to be XTrader.
Got it.
And then it became, that was always their name. And the reason I'm bringing them up, and the reason I mention that, is because they are the inventors of the DOM idea. And I'll talk to your comment in just a second, Brian. Yeah, I've actually had a really good morning. I traded the open in one of my funded accounts, and I did well. Anyway, so back to that topic. Excuse me. So once there were some decent retail trading platforms, and again, eSignal was more charting than trading, and TradeStation was around in those days. That was like right at the end of the 1990s. And XTrader was around, and they invented the DOM, and and some people call it the DOM and the DOM, I call it the DOM. But everybody who has any vertical layout, like you're seeing on my screen right now, for example, Jigsaw, there's a royalty arrangement with the guys that developed this idea. So why is it good? Because it's vertical. And thank you, Jay. Yeah, TT. There's a lot of little components I'm going to go in, but again, if I start into it right now, then the number will come and I'll be rushing to talk about the number. So I'm going to go a little slower and make this session just a little bit longer. We have another TRG, care and feeding of inflection points class for TRG members at the bottom of the hour at 7:30 my time. You can see there's a clock in my little right-hand corner there. So anyway, that's what we're going to do. In the meantime, let me just kind of tell you what you're seeing on my screen. The only thing right now that is on my screen that is not, well, there's two things that aren't Jigsaw. These NinjaTrader windows here for each index, and I'm not really going to go into a lot today what those are because that's not really about Jigsaw. TRG members hear me talk about that all the time. We will talk about those during the class, but peripherally, I'm going to focus on what Jigsaw does. So those aren't, and then this one little window here, this white, that's a quote board from Sierra Chart, which I'm running on my other monitor, and that's how I look at structure of the market. For example, here I can pop one up so you guys can see it as well. This is Sierra Chart with emoji tools on it, and you can see the initial balance forming right now as we go back and forth in this little tight range, and this indicates that there's supply up here, and that's a price rejector down there right before the open, and we're above it, you know. So take what you will out of that, but I use structure like that for context. But I'm a price action scalper, so I'm looking for extremes of the price that I can fade, or I'm looking for a lot of momentum I can go with. And that's a lot of the stuff we're going to talk about here for Jigsaw. So again, the only things that aren't are these four little windows here and this white window. Everything else is, oh, I'm sorry, that market analyzer too. So both of these little windows, and I'm just watching the net change on the volume there. And I've got some tapes running, and again, I'll talk all about the pieces, but I'm going to wait till after we get the number because I want to see if we can do a little fun trading with the numbers. So let me introduce that, and then we'll circle back around after we get the number, and we'll go through some Jigsaw features and what I'll be teaching in the class. Is it starting Trader Pro? I'm not sure what the question is. Can you elaborate a little bit, Roman? Yeah, so to Brian's comment that I trade better when I'm not well, I actually do because I have to really concentrate on focusing. And I traded the open just scalping, you know, blocks of micros, and I did pretty well. But what's going to happen is I'm going to start fading here as we go through this session and the next one. So, but I promise I will be rested up for the actual class, which is not starting till a week from Saturday. So. Anyway, let's go through real quickly what else you're seeing on the screen. All of the domes you're seeing, and these which are called auction vista heat maps, this is the liquidity in the market. This is MNQ. This is also MNQ. I'm trading two different accounts there. This is NQ. This is crunched NQ. So basically what I've done is instead of NQ trades tick by tick, a quarter, you know, so a quarter, 50, 75. And what I've done is I've crunched that together. So it's 4-to-1. So just every point. And the reason I do that is it's really easy to see the range. And, you know, where's the VWAP? Where's the top of the value area? Where's the bottom of the value area? And that's what these colors are. The colored part on any of the volume profiles represents the value area. And the blue line represents the VWAP. That's all I use. I don't use POCs and or anything else. But there are a lot of other things you can turn on and off in there. And again, I will talk about that. And one of the things that's really interesting about Jigsaw, I've been using Jigsaw since 2014, 2015, right around there. And so, you know, that's a good 8 years. And one of the things I found is it has a lot of tools. It's Jigsaw tools, that's the name of it. For example, there are things called power meters that show a kind of a graphical representation of either the order book or of the traded volume. And that's really useful when you're new. And I used it when I was new, but I've gradually, as many experienced traders do, you know, the better you get at your trading model, the less information you want in front of your face. And so, you know, I take things, anything I'm not using, I take off, and I only have running the things that I use. But going back through my development and looking at my journals through the last 8 years for the Jigsaw stuff, I realized that there was a lot of things I was doing with other tools that were useful for me at that point. They're just not now because I'm further along. And so anyway, we will talk to that, but it's, you know, if I was going to say just one thing that there's two things. Well, let's make it two things. If there's two things, if someone said, well, why are you such a Jigsaw fanatic? And, I also use Sierra Chart and Ninja. You see that here. And Thinkorswim. But and Thinkorswim's legacy for me, Sierra Chart is for structural, looking at 30-minute market profile periods and the session market profile periods. But I exclusively execute on Jigsaw, and it will connect. So here's a couple of quick things about it. Jigsaw is multi-broker, multi-account right out of the box. So I can connect to any number of accounts separately or at the same time. It doesn't have any copying function, but that's why, for example, you can see I've got two MNQ DOMs. They're two different accounts. So, and I've got slightly different strategies in them. So I'll trade them both at what I perceive to be a good setup, but the tactics that I use are different because, again, it's a different strategy in between the two different accounts. So, and the reason there's a different one is because one is my own cash account and one is a funded PA at the evaluators, and I manage risk differently in those. And that's what it's all about, managing risk. So left to right, MNQ, NQ, crunched NQ, ES, and to the left of ES is a heat map of the liquidity of ES. Same thing with NQ, but it's crunched together because NQ trades. This one's uncrunched right here. And if you look at it, it's like you have to go really far to see the edges, and we don't have a very big range yet. It's only 135 points, and NQ ranges can be 3, 4, 5, 600 or more. And it just gets really hard to see where the volume is. But if you crunch it together, it's real obvious where the inflection points are forming.
You might need to explain what crunch is for people who aren't familiar with that.
Yeah, I did a few minutes ago. Basically, this is tick by tick, and this is 4 ticks. So I'm just looking at it point by point. So see how this goes 87 quarter, 87.5. This goes 87, 88. So instead of looking at it a quarter at a time, I'm looking at it as a full point at a time. And the data is still valid, and particularly with NQ, since it moves around so much, it's actually a better way to look at it. But you can't look at it exclusively like that because you can't see the granularity, within those 4 ticks of a whole number, which is what we're doing over here. And then on the far right, I've got YM and RTY. Again, that's about watching correlation. When the markets are breaking ledges, for example, let's say we were up here at the high on ES, and we are up at the high on YM. We're not quite in RTY, but let's say we still were. And ES was up here, say, above 8 or so. Yeah, that's a correlated rallying market. This isn't one of those, but I'm just pointing that out because that's why I use that. Okay, let's see, some decent questions. Let me hit them real quick. My computer spec, and is it running on one computer? Yeah, I run several trading computers, but right now we're just seeing one, and it's an i7 with a 1650 graphics card. Jigsaw is very efficient. The program that really taxes CPUs and graphics cards is Ninja. Everybody else in the space works pretty well with minimal resources. So Sierra Chart, Jigsaw can run on a very bare bones PC, but I don't recommend that, obviously. But that's a good question. Who do I use for funded accounts? Also a good question. I was actually involved with Top Step when they started, so I have traded with them. Now I have Apex and Lilu funded accounts and my own cash accounts. And I do use a trade copier. I don't use it all the time, but I use the Replicanto trade copier in NinjaTrader. And what you're seeing now is something called the NinjaTrader bridge to Jigsaw. So Jigsaw, in addition to being connected to several other data feeds and accounts, is connected to my NinjaTrader one, which right now is where my Apex funded accounts are. So I can go in there and turn on the copier and copy whatever I want up to the 20 or whatever. I don't do that very often. I find it's too much risk because if you make a mistake, you blow up 20 accounts. Not a good idea. I do copy, but I generally don't copy to more than 5 accounts at a time because the worst case is I lose 5. I can make up a new PA in 2 weeks, basically. It's a 7 days to pass, and $3,000 in a 50K, quote unquote, for example, is fairly easy to do, even faster than 7 days. So 3 accounts at a time. Yeah, again, the only danger with constantly copying, no matter what you're doing and always copying, is even though you're spreading your trading risk out, your catastrophic risk is much higher because things happen that are outside of our control and we make mistakes. We're human. If you do that, you blow up all your accounts. So as you start to develop more, I would start putting them into brackets based on risk or based on the conditions. That's what I do. I open up trading one account and fairly aggressively. I trade the open all the time, every day. We have classes about that in TRG. And then once I see kind of what the action is and how my read of it is, then I'll decide if I want to copy or not. And again, it's to prevent the catastrophe of, doing a lot of damage to everything. Blowing up 1 or 2 accounts when you have 20 is no biggie. You can always just go get another one. So one thing about the evaluators and the quote unquote funded accounts, the PAs, this is really new. Top Step started it again. I was involved with them at the very beginning. When I started trading, if you wanted to, we have the ISM number. Sorry, here we go. Here we're in price discovery here. Anyway, when I started trading, if you wanted $3,000 drawdown, you had to put $3,000 in an account. You don't have to do that anymore. You buy a $30 eval on sale and you do the $150 one-time fee. And for $180, you're buying $3,000 or $2,500 of risk or of drawdown. And so anyway, the numbers, let's really quick look at them. They pretty much came in right about on expectations. I never look at the actual numbers, by the way. I'm looking at the reaction. And this could be an interesting reaction to scalp. If it can push up a little higher, let's try it. So I'm just shorting 5 micros here, and I'm going to try to scale it, but we always protect our profits. So we are doing that right now. So I'm short 97.75. Trading 94, we'll be able to peel off a $50 bill. I call this using my dome as an ATM. Now it's a $100 bill. And you can see I'm short from up here. This is my take profit stop. It just got hit. So, and that's in one of my cash accounts. So, okay, that's a little free alarm clock program that tells me, guess what? It's the top of the hour. And you might want to have a quick look at structure to see what's going on between A period and B period. So look at that. We don't have a price rejector up there. We ran some stops down there. There's still a price rejector down there and supply above us. So take your pick. Again, I don't trade off that. It's just contextual for me. Okay, now we are past the number. We had a nice reaction there. I wouldn't be looking long down here, but it's not a horrible idea. Maybe we'll just scalp a quick long. I was a little late, but let's see if we can just grab a quick $25. There it is. Okay. So anyway, this is how I use Jigsaw. This is called absorption right here. The price pushed down to not quite the edge of the value area, but close. And in market profile theory, that's called responsive buying at the bottom of the value area, responsive selling at the top of the value area. You've all read the books, I hope. If you haven't, market profile theory is useful information. I don't trade off of it per se, but I use it to scope out potential inflection points like that one. And that one clearly was a real inflection point because, all the sellers got absorbed and we popped back up to the other end of the range, right on the top of the value area. And this looks like it might have a little bit of upside energy. See what I mean over here on the far right? All 3 of these guys are at the top of their volume profiles. And, again, that's ES, RTY, YM. So we're reasonably correlated slightly down. Here's another view. I'm dragging over from my other monitor. This is what I have set up in Thinkorswim TOS. And you can see we basically gap down in each index except YM, which looks really strong. That's probably earnings related. Let's see what's there. Sure is. It's Caterpillar, I'm guessing, is up 6%. That was probably earnings related, but I'm not certain of that. And everybody else is kind of mixed. So, and again, we trade the futures, but it's important to kind of understand what the equities are doing because we're a derivative of the equities, and they'll separate from each other and not necessarily do exactly the same thing all the time. But sooner or later, they have to come into some sort of reasonable balance because one's a derivative of the other. So, anyway, these other lines on these charts are just standard deviations of the volume. That's one of the ways that I look for potential places to play. We'll talk more about that. So let's see. Okay, I caught all the questions. All right. So anyway, I started to say right before the number came out, there's a couple of things about Jigsaw that are just for me wonderful, and you can do almost everything you do in Jigsaw in other good platforms like Sierra Chart, but the domes and NinjaTrader are useless. So you need to be able to see traded volume on your domes. And what that means, and in Jigsaw, there's actually 3 different kinds of traded volume you can look at. And what I'm doing is I have a volume profile here with the value area, like I explained, and the VWAP. And then what I'm doing, the left, as you go left toward the price, there's 2 other columns. And Jigsaw calls those current and total trades. And so, for example, you can see an inflection point forming right here. And those numbers will reset when it gets there. And I can also do that and get, a clean slate and look at fresh numbers. So, so this is a way of looking at the traded volume that's very, very powerful. Let me just make one quick comment about that that's really important. There's two pieces to the futures market that are relevant. One of them is liquidity. And right now we have crappy liquidity. If you look at ES, there's a lot of levels that don't even have 3 digits of buyers or sellers. What you see right here, those are the people selling. These are the people offering to buy down there, and bids and offers, in other words. And it's important to understand that those are what people say they're going to do. When I put up 100 lot at some price, I'm advertising to the futures traders that I'm going to trade that there, but that doesn't mean I will. And that's the difference. So this is another great spot. So let's fade this a bit up here. See if we can get a little higher to fade it better. Meanwhile, we'll just use a $50 target down there, which is good. It's above 0. This should fill. This is the technique I use called swarming in micros, where I kind of scale. The more extreme it gets away from value, the harder and more aggressively I'll trade it. Let me close that one. And I will be showing that technique during the class. We call that swarming. And let's see if we can get a little bit of this off. We can. And I took the rest off. Again, another quick $20 bill. Let's cancel that. Okay, so back to Jigsaw. And so what we're seeing on these heat maps is we're seeing what people say they're going to do. And the whiter it is, there's more offers or bids there. So you can see, like on 12, there's 260. That's why this is white. Right above it, there's 95. That's why it's a darker color. It's less important. And it's important to understand that what Jigsaw is telling you is that people are saying they're gonna trade there. A lot of people read way too much into this, because what's much more important is the actual traded volume, and that's what you're seeing in the different columns on my domes. And again, short amount of time here, we're going to go about another 15 or 20 minutes. I can't go into a lot of depth, but I can tell you a lot about why I use Jigsaw, why it works good for me, and why you might want to come to our class and learn more about it yourself. Here's an example. See this white here? That's a bunch of liquidity that was there. Those were standing orders there. And these little circles with the red or the blue and red in them are showing that volume actually traded. Those are little high volume nodes is what they are. And I can filter those to see less of them or whatever. And that's kind of cool. So for example, let's make fewer right now. See, now we just see, oh, that's perfect. So I can see right there, it came up to that liquidity traded on the ask, and we came all the way back down to 3 from 8 where that was. Just based on that, you could do a nice little 5-point scalp. That's the kind of stuff I really like. It just shows me where people are playing. It shows me how intensely they're playing. And that's really valuable. Okay, I want to show something else really quick, which is absolutely the #1 thing I love about Jigsaw. And I will say this unequivocally. Correct me if I'm wrong, but I know I'm not wrong. There is no platform that'll do what I'm about to show you the way it does it. And here's how this works. There's intelligent order management in Jigsaw. And this is huge. Let's say, just for argument's sake, I want to be short here. And let's do this in a sim, just so I don't have to worry about making or losing money. Okay, and so I just shorted 0.0 quarter, okay? So let's say, maybe I want to short a little more up here. Another order up there. Okay, and I want to protect this. Maybe let's only protect a couple of them. So I'll say, let's put a take profit stop of 1. Trying to show you that I can move these orders just by clicking on the price, and that's so powerful. Let's say it comes down to this volume. See, it just did it and it bounces. I can jump right up there just by clicking on that price, and it'll fill me. And I'm going to do that again real fast so you can see it. And so wherever I click, that order will move. So I want to get it out of the way. I just do that. Now I can protect it there. Okay, we took 5 more off profitably. Let's see what we can do with this trade while we're doing it, even though it's in the sim. But this is so good for fast price action scalping, because you don't have to drag and drop. You just have to click. And I'm a mouse trader, and this is critical for me. Let's grab another couple here, and so we can demonstrate this a little better. I'll just put some targets in, and you'll be able to see me move them around. Let's see if we can get some more up here. And again, I just want to demonstrate that intelligent logic in the in your order management. So I just put on a little bit more here. We've got 13. That's kind of an odd number. Let's make it 15 here. Okay, now make these 5s. We can take them off in chunks. So cancel that. Okay, see how fast I can do that? For scalping, that's critical. And again, there is no platform that can do this. Here, let's put a target right there at 1. And let's say it pops down and gets bought at 2.5. All I have, or right here at 3.5, all I got to do is click there. And boom, it took that last 5 off. Then I can protect this. And I can also trail the same way. I can set it to auto trail if I want, but all I have to do to move that is click. And this is huge for me as a scalper because I have 3 rules to my scalping. Rule number 1 is good trades work right away, like these are working. And in other words, as soon as I get into the trade, I should be able to start looking for profits, at least on parts of it. Number 2 is always take profits. Always protect your profit. Don't look for runners. If you get a runner, great. But doing that is asking yourself, you're setting yourself up to get really far off sides doing that. Whereas if you always protect whatever profit you have in an NQ or MNQ trade, the worst case scenario is you take a little profit on every trade. And the best case scenario is you get lucky and you catch a runner. And I did that on the trade we just did a minute ago, not the STEM one, but the one before that. I took profit on the first chunk and then protected the rest of it, and we dropped like 25 more points. And that's the approach you want to have. And this intelligent order management makes that just really elegant. And like I said, there is nothing like that, with the exception of TT. If you use TT, it does something similar, but TT doesn't have the traded volume on it, which is really weird. They do have the order book, but anyway, so that's the story there. TT is also really expensive. Okay, I see a bunch of questions. Let me jump in. What's the name of the program that I use to see market depth? Are you talking about these auction Vista heat maps here, Screeny? No, wait, wrong. Roman? Is that what you're asking me? Please respond in the chat and I will try to answer your question. You're talking about these? All right, I'll come back. Please give me a response to that and I'll try to answer. Let me grab another question. Fund accounts, I answered that. Do commissions use a lot of your profits? Oh, Casey, great question. I get this all the time. And with all due respect, it's a silly question. If I'm a restaurant, typically a restaurant's profits break down as a third food, a third labor, and the other third is your gross profit, okay? Same way in trading, if I make more than $1 on any micro trade, it's profitable. The ability to manage risk by trading blocks of micros, like you just saw me with 5 micros, for example, instead of an NQ, that granularity is huge. And so, there's times I will trade, 200, 300, 400 micros instead of the mini, because I can break them into pieces better. And one of the things about NQ, but a lot of the futures, CL, gold, YM, RTY, the only one that really isn't about too badly what I'm about to say is ES. You can get to an inflection point, and we have the inflection point class coming up for TRGers. We'll talk about this a lot. It doesn't always work right at that price. Like, the high is 16, and maybe if you say, okay, good spot to fade, this is 20, right above a ledge break up there. But, it might go to 22 and it's still the right idea. But if you don't scale that, you just end up really off sides and often with the same idea, it's just too much risk. So, so commissions, to be quite honest, are cost of doing business. And I'd much rather pay a tiny bit more commission for blocks of micros than minis and have that flexibility. So that's an answer. Excellent question. Still waiting, Screeny. Can you tell if those white areas are buy or sell? Sure. Which side are they on? If you're up here and you're posting a bunch of liquidity, you're advertising that you're going to sell up there. And vice versa. It's not like, that just means there's lots of orders there. Somebody that's advertising big size way out of the range above it is looking to sell, and if it's way below it like this, they're looking to buy. That's just order flow, and we do have a really good order flow class that you can get. What is it, $25, JVC?
That is correct. The online course is $25.
Yeah, and that will get you through a lot of the, how does order flow work? And that's important because I will be talking about that, but I won't specifically be explaining that stuff very much in the class sessions because we just won't have time. I really want to dig into features like, for example, this is the order book. This thing right at the bottom is really cool. It's called a flip chart. And again, you can set it up in other platforms. It's built into Jigsaw, and this is one of the really powerful tools that I like. What this is doing is it's showing me a net of X number of price levels and the net stacking and pulling. So who's pulling away their orders and who's adding orders. Ooh, this is aggressive. Let's see if we can scalp this puppy. Where is it, 50? All right, this is a good example of what I can talk about. That might not be the bottom, but if I can add a little bit more to it, I'll get a really good entry to a snapback long here. But I don't know where this is going to stop going down, so I'd much rather use a little blocks of micros. And then I can manage the volatility here. So that's the answer to your question. I just did it there. If I'd done that with a mini, the risk of the bottom falling out would have been substantial. But with 2 blocks of micros, was essentially the same thing. I can manage it and take profits along the way. Hopefully that answered your question. How many trades should be successful to make a profit in percentage? There's absolutely no number that is correct for that. Roman, I know people that have 20% winners, but their winners are so big that works. My numbers are ridiculous. My win rate is, as of this moment right now, for the last 275,000 trades, is 97%. And that's a little too high, but it's also distorted by that style that I use. I can get off sides and make a trade into a winner by scaling it intentionally as the extreme develops. And we're seeing an extreme right now developing. See all this absorption down there? You could have easily bought that and grabbed a quick 10 points. So that's a good example of it. Let's see, I'm going back. Name of the, do commissions, okay, how many trades? Okay, so I answered that. I know good traders that do one good trade a day. Lee, my co-founder, is like that. He'll do a couple trades and put up 4 figures or more. But he's a structural trader and his approach is different. I look for lots of little wins. They add up really fast. If you look at if you look at it in our pit, our community that I think you all should be registered in. If you're not, it's free. There's a stream in Anything Goes that's called Scalping Micros This AM. And I frequently post my trades each day there. And you can see my win rate's ridiculous. Just look at the green. Every day is green. Every now and then you'll see a day with maybe 1 red. And I'll see if we can find one. And yeah, there's one. And, I still managed to pull $1,000 out, even with one $400 and one $600 loser. So, again, that's not really it's relevant, but there's a lot of different win rates that you can make work. It really depends more on you than on, there's no magic number. But look at all this absorption down there. Let's get long again. Just, if nothing else, for a pop-up here. And there it is. Again, you can do that all day, what I just did. And that was a 5 micro trade that made $20. I call that, using the dome as an ATM. I need 20, I need a 50, I need 100. Sometimes I get a lot more than that, but getting $100 20, 30 times in the first hour, that's a decent little profit for the open. So that's the answer there. Anyway, let's keep moving. We have I'll go till, I need to take a short break between classes here. So we'll go till 7:20, 25. So we have about maybe 5-8 more minutes. And then I need to take a quick break before I go, before I go the inflection point class. Let me just go grab my tea. I made tea right at the beginning of this class and I forgot about it and I really need it. So I'll be right back. Please put questions in the chat and I will address them. And again, thank you all you newcomers and guests and people I've seen before, friends of TRG. Appreciate you coming. I'll be right back. Okay, so one thing, I was just talking about the flip charts down here, and this is one of the things I really like about Jigsaw. See how that flipped over from red to blue as it was absorbing liquidity down here? And now it's the other way around. What that's telling you, this low is probably gonna go, but not necessarily, but what that's telling you is that the people net of 3 levels in this case are removing more buy orders and adding more sell orders than the other way around. That's what the flip chart does. It's the net stacking and pulling. This is a really good extreme right here to play. But again, might need to scale a bit. So let's get a first chunk off. Let's protect the second chunk. No runner, but that was a 10 micro for $75. And see, Jigsaw just makes that so simple. You see how fast I can move orders and I can get into the market and put my targets in, and I can see the trading happening as I'm doing it. I can see this liquidity at the low getting absorbed. It's going to blow through the low. It's how far it goes is what we want to see. And again, as a scalper, I tend to buy those and just look for a couple of quick points. But if you do that too aggressively, for example, in NQ, you'll be upside down $2,000 in seconds. And that's why I do that way. Let's see. By the way, there's a bunch of good videos in the library in TRG. You can get a library pass for $25 also. And there's a series, if you want to understand that idea, there's a series on risk management where I go through swarming. There's 3 2-hour videos in the lab. And we have thousands of hours in our library of stuff. So, if you're just interested in getting more information on that, that's how you could do it. Okay, let's see. Do I like this in the low 30s? Yeah, I do. You just saw me trading it. I'm probably late on that one. Here we go. The bottom is going. And again, let's just, scalp some. Let's see if we can get a runner on this one. Well, that popped up to a target. When that happens, it either is going to rip up here or the bottom's going to go. So I want to protect this as fast as I can. And let's do that. Let's see if we can get a runner going here. Probably not. Nah, we made another $50. So I'm doing all that in Sim though. Let me go back to my cash accounts so I can at least benefit from that. Okay, let's see. Are your member students able to replicate my style? Yeah, a lot of them are. Let's see. There's Alfredo and Brian, and let's see. Some of you others I don't know well enough to know if you're doing this that much, but Jeffrey Fielding, Michael Challenger, a couple of the Sebastians, Ted, yeah. Chime in, you guys. I know you guys use this, and you understand the logic and the power of it. But again, that's not really Jigsaw. It's just one of the ways I use Jigsaw. That's a technique for order management, for execution. Thank you. There you go. That's the guys chiming in on that. So
to be clear, though, it takes an enormous amount of practice. This isn't something you're going to attend one workshop, 8 sessions and magically be an expert at. Not at all. Right. You need to work at it. That's all.
Yes. And I'm going to, that's the second question. How long does it take to get to be profitable? That depends on you. But if you practice this every day, I think you could get to that point in a year or more, depending on your background. But don't think you're going to do it in 4 weeks. It just doesn't work like that. And again, I've been at this game a long, long fucking time. If you guys just came in, 50 years, literally. I'm not exaggerating. I've been trading for 50 years, almost 51. I'm 63 years old. I started trading, as I mentioned earlier, with options in 1973 when I was 13. Took some birthday money and opened my brokerage account. So, but I love futures. I trade nothing else but futures. And at this point in time, because the volatility is just perfect, we get such good movement every day. The only thing I'm trading is NQ and MQ. I'm not trading any of the other indexes. Sometimes I trade oil and gold and some other futures, but there's just too much money here. It's too easy to extract money out of the indexes. It's the perfect market. You can see whether you have correlation or not. You can see if, like right now, all 3 indexes are at the low. They were all at the high a minute ago. So, there's definitely long opportunities down here, but you got to be careful because, the market did sell off to get here. And I use a technique called linear regression to look at ranges. That's nothing to do with the Jigsaw class, but that's a linear regression of the last 2 hours. And this is very powerful too, as to where to look for inflection points. We'll show examples of this with trade setups, but I'm going to be focused on in the class on watching, where the traded volume is. Is it trading, like right now, it's trading into the ask. If it can't get above this, we're going to go down because, those are buyers getting absorbed by sellers. That's what we're seeing right now. That doesn't mean it's going to stop here. That's the value area low. That's probably a good spot for that idea too. But we can see that absorption happening as I'm talking about it. Trading on the blue, trading on the ask is absorption of buyers up here. Because every buyer hits the limit orders and we don't go up. So that's a good example. It doesn't mean we won't in a minute, but this is an inflection point. Okay, let's see. Yeah, ledge breaks, exactly. The best way to execute what you just saw me do is either going with ledge breaks, and the ledge is the edge of a session, like you just saw me do. I got long down there. And often what I'll do, if it's really trending strongly, I'll join the break of a ledge. In other words, at a low, go short. And then when I see absorption, I'll reverse that trade and go long back into the range. And again, to the question about how much time it takes, there's no magic here. Everybody wants to sell you secret sauce indicators on the internet, and algo box, whatever. It's all bullshit. Pardon my language, but it is. What you see me do is the result of practice. That's all it is. I understand how the auction works, and I look for places where it's thinking in bets, where are the odds really good for me? And the ledges are the best place. And then as the day evolves, the ranges, the market tends to get rangy during the middle of the day, then you can just play the ranges, edge of one end of the range and the other end of the range. And you can treat it like it's the ledge of the session. You just have to slightly different execution tactics. And again, I will show that. Those are things I'll be showing in the workshop. Okay, let's see. Yeah, exactly. Okay, we're right at 7:25. Yeah, Casey, you're welcome. All right, I am going to have to start wrapping up really soon because I have a class in 5 minutes. And again, I'm sick. So thank you, everybody. Are there any other questions or comments? You can always post them in the pit and we will address them there. JVC and Lee are here. Lee's my co-founder. JVC runs our community. He's our community manager. And any one of us can help you. I'm the hardest to reach, and me and Lee are the hardest to reach. JVC responds really, really fast. And he's on the West Coast of the United States like I am. So Lee's in England, and so, he might be overnight when you ask a question. So by all means, please post any questions or comments. Are there any other questions I can answer really fast before we wrap up? Thank you, Ted. I really appreciate it.
I'm also easy to reach on Facebook. For those who maybe saw this in our Facebook group, you're welcome to DM me in Facebook as well. Yeah,
exactly. Okay, I don't see any other questions or comments, so I'm going to go ahead and say thank you very much for coming. Really appreciate it. Thank you, Michael. Appreciate you saying that. And let's go ahead and wrap up. Thanks for coming. And again, there's another preview Friday. We're going to do the same thing. We're going to trade NFP, and I'll go into more questions then because I'll have more time and hopefully I'll be a little healthier. So we can dive in a little bit deeper into some of the topics that are on the curriculum for the class coming up. Okay, cool. Yes. And one other thing, JVC, can you talk really fast about the coupon and where to sign up?
Absolutely. If you go to the link that is in the chat right now that I just added the protocol to, so it would actually be a clickable link. You can click that, you can sign up. And for right now, for a few more days, you can use the coupon code early bird and put that in the chat as well. You can use that coupon code and you will get $200 off the tuition for the what do we call this? Workshop, boot camp, whichever.
It's a mini summer.
The thing. Yeah. Yes, yeah, the thing. Yeah. Yeah, if you want to join us for this, do that. You can sign up now. It's open and ready to go. We've already got a bunch of people registered on, so feel free. Otherwise, if you've got a few more questions you want to get answered first, join us on Friday for the NFP session and we'll get them addressed then.
Perfect. Okay. Thank you, JVC. Thank you, Lee. Thanks, everybody.
No see you in the next class.
Guys. Yeah, see you CTRG members at Inflection Points in 3 minutes, and I'll see the rest of you Friday at NFP if you want to join us. Thank you.